Peddling fiction, huh? Anyone that says anything bad about the economy and the numbers must be peddling fiction, says the President of the United States, Mr. Barack Obama. However, according to Zero Hedge, tax refund tumble tells tale of tumultuous recovery. As we detailed previously, the growth of federal income and employment tax withholdings, the broadest and most timely read on the health of the job market, has been sinking at an alarming rate. What is worse, as Converge EX's Nick Coles notes, IRS and Treasury data show refunds tracking 2 to 3% below last year's level. Not good news for companies that focus on the low-end consumer and the cohort that tends to spend rather than save their refunds. Now you're starting to know why Walmart forecast no sales growth for the year of 2016. Walmart, cheapest of the cheap. Walmart forecasting no sales growth for their own companies, and we're going to be closing a couple hundred plus stores. 160 something of those in the US. I guess Walmart's peddling fiction. Actually, I think they're peddling non-fiction, since they're the company that's doing it. The Daily Treasury Statement is essentially America's checkbook and offers a read on two important issues: the pace of tax refunds and growth in wages. We're right in the middle of the January to May refund season, when the U.S. Treasury pays $270 billion in lump sum payments to 100 million plus American households. Those remittances, which this year averaged 3,164, are on underappreciated Philippe II Q1 or quarter one consumer spending and household debt reduction. Through the end of February, both IRS and Treasury data show refunds tracking 2 to 3% below last year's level, which is not good news for companies that focus on the low-end consumer, which is, of course, the cohort that tends to spend rather than to save their refunds. On the wage growth side, it is the proverbial half-empty / full glass. Income tax / withholding payments to Treasury are up an average of 3.6% over the last 3 months, or half full if you will. But that run rate is noticeably lower than the 6% growth at the same time last year, or half empty. Death and taxes may be inevitable, but they also seem to inspire great art. Pondering one's own mortality inspires the creative mind to produce something that outlasts the mortal coil, of course, and oddly enough, the need to render unto Caesar his provides a similar impetus. Maybe meant this. Take, for example, the Rolling Stones circa 1971. Then, at the height of their fame, they also happened to be at the nadir of their financial success. Thanks to a series of unscrupulous managers and advisors, they were not just near broke, but they also owed Her Majesty's government $1 million. Marginal tax rates in the UK were 80% at the time. They simply couldn't pay their tax bill if they recorded their next album in the United Kingdom. So they did what real rockers do. They fled to the French Riviera, where Keith Richards rented a large villa, and the band recorded in the basement and partied everywhere else. The place is called Nel Cote. Or is that just Nel Cote? And there is a link at the end of this note to 40 plus pictures of the Stones and residents there. The double album they created during this time, Exile on Main Street, as in tax exile. Most Rolling Stone fans put it at or near the top of their list. And as with all great 1970s albums, think Fleetwood Mac's Rumors, the story behind its creation is part of the magic. Taxes, tax data really, can also tell important economic stories. And although this is an underused vector in macro analysis, it's worth a look. Take, for example, the income tax and withholding payments made to the U.S. Treasury. Most working Americans have their taxes and Social Security program contributions taken out of their paychecks, and those in the gig economy, or real estate agents, Uber drivers, and other contractors, make separate remittances to the government from their earnings. The U.S. Treasury posts a daily report that outlines these payments, along with everything else the federal government both receives and pays for. Links to this report, the Daily Treasury Statement, are available at the end of this note. Again, this is a Zero Hedge article. From 2010 to 15, growth in withheld individual income taxes and other payments averaged 5.1%. That's far better than the GDP growth, for example, which has not breached 5% in any quarter since the Great Recession, which is 2008. Plus, the repeal of the Bush tax cuts on higher income households didn't have much of an effect, with 2010 to 2015 withheld income tax, other payments, running a very consistent 5% year over year. This means that the part of the U.S. labor force that pays federal income tax, those who make roughly $50,000 a year and higher, has seen steady wage gains for the last half decade. Keep in mind, this doesn't include capital gains or small business taxes. Those appear in other entries on the Daily Treasury Statement and are not included here. This is simply the growth in withholdings that go to Uncle Sam every paycheck from those workers who receive a paycheck. In a troublesome development, the growth rate of individual tax receipts/withholdings is now showing signs of a slowdown. Adjusting for the effect of a leap day, average 3-month growth ending February 2016 is now 3.6%. Taking into account those in the growing gig economy, it is still just 3.7%. That is well below the 5-year run rate of 5.1%. The slowdown started in late 2015 and reflects the slowest growth in withholding, using 3-month rolling average because the data is choppy, since 2012. Why is this happening? Well, I can think of 3 reasons. First, the types of jobs the U.S. economy has been creating over the last few years may be lower paying than average. Lower marginal incomes lead to lower tax remittances, and eventually this trend finds its way into the tax data. And you can also add so much part-time work going out there instead of full-time work. Second, the true pace of job growth may have been slowing before the official employment situation report picked up on the trend in quarter 1 2016. The Friday jobs numbers is, after all, just a survey. Tax data reflects the actual truth. Lastly, companies may be starting the process of controlling direct employee costs wherever possible. No matter what the answer, the tax data we're discussing is clear. Total wages are not growing as quickly as they have been. The other story worth a look relates to individual tax refunds. Both the Daily Treasury Statement and the Internal Revenue Service report on the size and pace of these payments, which occur annually between January and May, as filers get their returns to the government. Last year, these payments totaled just over $274 billion, with average refund payments of $3,048 at this same point in 2015. While many refund recipients report using these monies to pay down debt, usually prior holiday debt from their credit card balances, or for savings, lower income households do spend their refunds. If you want to read more, Jessica found a great paper from the Harvard Business School on where this cohort spends the cash. Link at the end of the note, naturally. I think I'll go ahead and link this particular page for you guys so you can just go and check that stuff out if you want. Year to date, refunds are running slightly behind last year's levels. Through the 8th week of the year, DTS data show refunds paid are running a total of $3.7 billion behind last year's payments, or 2.9% lower than 2015. IRS reporting tells some of the reasons why. Total returns processed are down 1%, and total returns received are almost 0.5% lower through February 26. More individual filers seem to be going it alone this year. Self-prepared filings are up 3.8%, while those prepared by tax professionals are down 3.6% year-to-date. And I'll give you my own opinion why I think that's happening. I'll tell you firsthand. I go to TurboTax online, and I do my taxes right there. It may cost around $70 or something, because I do the one where you can write off certain things, because I do have to write off certain things sometimes. But so mine's a little more expensive than normal. You take that and then you walk into, Liberty Tax Service or H&R Block or wherever the hell you go. Oh, I got a tax professional. You're not a tax professional. You're a regular person that sits behind a computer that does all the work for you. You just ask the questions. I could ask myself questions on TurboTax online. Why the hell do I need someone else there to do it and then have to pay them? A lot more than I'm paying TurboTax. So my opinion is that people are realizing we're not getting as much back on our tax returns. I need to make every penny count because I'm in debt up to my eyeballs, right? So what do? Oh, I cut corners. I make it cheaper. How do I do that? I just do it myself. I file online. I file on TurboTax, or maybe I download the software. It's about the same price anyways. But you got to buy the new software every year. I want to mess with that. Just go online and do it. TurboTax. The number of returns that merit a refund are, however, down more than the 1% drop in returns processed. Year to date, the number of refunds paid, 46.5 million, are down 2.1%. Average refunds are basically flat at 3,053 versus 3,048. Now we're only about halfway through refund season, so there is still time to see some growth in the numbers. There have been numerous reports of slower return processing as the IRS combats cyber criminals who try to file fake returns and hijack a taxpayer's refund. But the early data is a touch weak, and that is worth noting as we consider the pace of U.S. economic growth in the quarter. As the old saying goes, $1 billion here and $1 billion there, and pretty soon you're talking about real money. And of course, I don't think I can agree more. The numbers don't lie. If you can look at a certain time period every single year, and it shows data, and you grab it 1 year, and it's noticeably lower, multiple places, different pieces of that data, one can postulate that we ain't peddling fiction. Right? We're peddling nonfiction, or the truth. The economy sucks, the job situation sucks, and your politicians all the way up to the president himself, they're lying through their teeth. What point does it serve lying to everybody? It just makes them look good in their own mind. Everybody else knows the truth. Everybody who's jobless or working 2 or 3 part-time jobs instead of 1 full-time job, or those who are working full-time jobs and their wages suck, knows this isn't how it used to be. Man, back in 2005, 6, 7, man, life was good, man. Now life sucks for you. But don't tell that to the president, because he's going to tell you you're peddling fiction. Take care.